Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a brand new week, lots of earnings to digest this week, and some macro data will also be coming out later this week. You know, the PMI services and manufacturing data as well. But of course, the GIFT Nifty this morning hinting at a positive start. We saw a very good rebound on Friday, although we have clocked in a third straight week of losses, which is the longest weekly losing streak for the market this year. We saw a good rebound on Friday and hoping to build on that, up move today as well, given the fact that we have the Nifty Bank Index to watch out for, 52,000 on the Nifty Bank Index on Friday. And, let's see whether or not HDFC Bank can provide that leg up or further up move after numbers on Saturday. We'll be decoding the numbers. We'll be getting you a lot of other stocks to watch out for in trade as well. And we'll also be getting all your stock related queries answered by our experts on the show. So if you have any queries, keep them coming in on our live feed. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street rallies for the sixth straight week, clocking its longest winning streak for 2024. S&P and Dow closed at record highs on Friday. Asian markets trade mixed despite a strong handover from Wall Street. China lowers its benchmark lending rates by 25 basis points this morning. The GIFT Nifty as well is suggesting a higher start for the Indian market. Crude prices continue to fall. Brent has slipped below that $74 a barrel mark, correcting over 7% last week on fears of lower demand and easing geopolitical risks. Gold, meanwhile, surges past that $2,700 an ounce to hit a fresh record. And key earnings to digest. HDFC Bank reports a steady second quarter with deposit growth outpacing advances. Meanwhile, Kotak Mahindra Bank reports a weak set of numbers with deposit growth coming in at a 7-quarter low, while asset quality as well worsens. While Tech Mahindra sees steady revenue growth continuing for a second straight quarter. And in key earnings to watch out for today, watch out for Ultratech Cement as well as Bajaj Housing Finance. Well then, let's quickly take a look at the cues for trade. Of course, as I mentioned, the market posted another week of losses, a third straight week of losses. Longest weekly losing streak for the Nifty or for the market for 2024. If you look at the financials, they were the outperformers last week, led by the likes of ICICI Bank and HDFC Bank. Let's see whether or not we get a further leg up, given the fact that we have HDFC Bank's numbers to digest. Among top losers last week, we had the likes of Bajaj Auto, Nestle, Trent, Maruti, Bajaj Finance, Hero MotoCorp. These were the big laggards last week. And, on the flip side, you had the likes of Wipro, ICICI, L&T, SBI Life and HDFC Life. These were among the top gainers on the Nifty last week. The Friday's up move, Friday's rebound was largely led by financials. We saw the Nifty Bank Index, rallying somewhere around 800 points or thereabouts to close above that 52,000 mark. But Infosys, on the other hand, from the IT pack, saw profit booking after the second quarter numbers. FMCG as well, under pressure. And of course, this morning we have Tata Consumer numbers to digest as well. Put call ratio on the Nifty climbed to 0.93 vis-a-vis 0.88 in the previous session. A couple of new entrants in the ban list today, F&O ban, Waaree Industries and Birlasoft. Aside of that, if you look at some of the counters that will remain in the F&O ban from the previous sessions would be Bandhan Bank, Chambal Fertilizer, GNFC, Granules India, Hindustan Copper, IDFC First, IEX, L&T Finance, Nalco, PNB, SAIL, Tata Chemical, etc. But on the flip side, you have a couple of stocks that have exited the F&O ban list. That's Manappuram Finance. Of course, that stock was in focus last week. We saw a sharp sell-off coming in on the back of RBI embargo on one of its arms, Ashirvad. So that stock was under pressure. But today, of course, out of F&O ban, and RBL Bank is the other one that will be out of F&O ban. But let's, on that note, get on board our technical analyst for today. Joining me is Kunal Rambhia, fund manager at the Streets. Kunal, great to have you on the show. We have seen pressure, we have seen volatility, but Friday was a good rebound. Do you see any bit of reversal on the charts? Do you see 25,000 being tested once again, either today or tomorrow? And what about the Nifty Bank Index? Good traction on Friday, but we have HDFC Bank numbers to digest. So higher levels on the Nifty Bank Index as well?
Good morning, Nandita. Thanks for having me on the show. So if you look at the Nifty, yes, we have seen the decoupling of Nifty compared to the Dow Jones, and Dow Jones, which is trading near to the all-time high. Nifty came down significantly after testing the high somewhere in the beginning end of September. But if you look at the trend is still absolutely positive. And look at the Nifty historical data. 22nd August was a level where Nifty gave a first breakout sign about 24,750. By now, Nifty has tested the same zone of 24,750 four times. In fact, on Friday, we gave a higher closing, and today we continue again the uptrend. So the trend is absolutely intact. And I think the Nifty can really pick up really good from the present level. Risk reward ratio is extremely favorable for going long. Stock specific moves can definitely continue. If I look at Nifty Bank future, Nifty Bank, then yes, I'm extremely bullish on the same. The only support level which one needs to keep in mind is 51,200. By any chance, if the Bank Nifty gives closing below 51,200, my entire bullish view of last 2.5 years might just come to an end. But till then, I'll stay bullish. Buy on dip can be a good strategy even for Bank Nifty.
Okay, buy on dips would be the strategy, but let me quickly take you through HDFC Bank numbers and what brokerages really have to say on this counter. Profits were above estimates, NII although were below estimates, asset quality slight bit of a downtick coming in there. Margins were also slightly lower. Profit growth was at 5.3% on a YY basis, which was above estimates. Net interest income 10%, expectations were around 12.5% or thereabouts. Gross NPAs at 1.36% vis-a-vis 1.33 on a quarter-on-quarter basis. Provisions came in a bit lower, 2,700 vis-a-vis 2,900 crores on a YY basis. Slightly higher on a QOQ basis. Core net interest margin at 3.46 on total assets and 3.65% on based, based on interest earning assets. In fact, the company has also said that it will be selling stake worth 10,000 crore rupees in, its arm HDB Financial IPO. And the issue size could be as much as 12,500 crore rupees for HDB Financials. Of course, pricing and other details of HDB IPO will be, announced subsequently. And a listing could be likely in December or thereabouts. If you look at what brokerages have to say, Goldman Sachs has a buy call target price at 2,156. They've noted that it's a slight beat on profitability with better visibility on earnings. And this is the second straight quarter of improvement in its core pre-provision operating profit ROA as well. Provisions are 10% lower than consensus according to Goldman Sachs, and it is the first quarter post-merger with ROA expansion, return on asset expansion to 1.9%. JP Morgan also has a neutral call. Target price is slightly lower at 1750. Although they have noted that the profit growth was above estimate, but margins were flat on a quarter-on-quarter basis. But there has been an improvement in loan and liability mix as well. But Kotak Bank on the other hand missed estimates, and asset quality has worsened. Of course, the bank has flagged off any bit of weakness due to the RBI embargo on its credit card division. Looking at the charts for both HDFC Bank and Kotak, divergent moves expected there, Kunal?
So Nandita, again, exactly 3 years back, on 18th of October 2021, the HDFC Bank made the high of around 1725, and since then, this counter has tested the same zone almost 7 times. Look at today's price also 1715. Unless and until this HDFC Bank closes above 1750 to 1775 mark, let's put a ballpark number of 1800. If it closes above 1800, then definitely I expect the massive move, because it's a consolidation breakout of 3 years, which we might see, and that will take the HDFC Bank to the highs of around 2100. But till then, I'll stay cautious on this. Kotak Bank on the other side is again sideways consolidating counter since 2020. This counter has not shown us the levels of 2000 and above. So I'll stay cautious on HDFC Bank as well as Kotak Bank. I don't expect a massive movement, but as you rightly mentioned, there can be divergent move from here on.
Okay, then on that note, let's take a look at how the markets have started the day. It is a pretty strong start, 100-point up move coming in on the Nifty. In fact, closing in on that 25,000 mark. As was being predicted, the Nifty Bank Index, 300-point up move coming in, 52,400 on the charts for the Nifty Bank Index. a very strong start, so to say. The mid-cap index is also clocking in 0.5% gains at the start. But let's take a look at the other sectors. Aside of banks, which sectors are doing well and driving gains on the index? Autos, after the badgering they got last week, we did see some bit of recovery on Friday, and today building on that recovery, 0.2% kind of gains coming in on the auto pack. Aside of that, you have metals doing well. Of course, we had China. China's interest rate move that is, coming in as a boost for the metal pack, almost 1% higher for metals. IT as well, after Friday's weakness and the fact that Infosys saw, fair bit of profit booking last week after numbers, we are seeing a good 0.9% kind of gains coming in on the IT pack. All in all, most of the sectors are trading in the green, barring the FMCG pack. That's the sole sectoral laggard, that's down 0.5% or thereabouts. And, realty as well, doing well, almost 1% higher on that index. So, very strong start. We are seeing IT, metals, even, banks, all of these sectors doing well. In terms of individual movers, I want to see what HDFC Bank is doing. 3% higher for HDFC Bank. It's at 1730 or thereabouts at the current juncture. Tech Mahindra, top nifty gainer, reacting to numbers. We'll talk about this stock in details in just a bit. 3% higher on Tech Mahindra. So earnings reaction coming in very strong, both HDFC Bank as well as Tech Mahindra. Aside of that, what's doing well is HDFC Life, Eicher Motors, SBI Life, Asian Paints as well doing well. It was among the top laggards on Friday. Today seeing some bit of a bounce. Reliance Industries building on gains. Remember last week Reliance was among the stocks aside of HDFC Bank that lent support to the index even on down days. So Reliance Industries looking at some bit of strength. 0.8% uptick coming in there. JSW Steel on the back of some news flow. Titan, Hindalco, Ultratech Cement numbers are coming out today, and there has been a brokerage initiation as well on the stock reacting positively. Tata Consumer, this stock is down 5.5%. Numbers came out. There was some bit of weakness. Tea segment also saw weakness. Stock reacting to numbers. Kotak Mahindra Bank down 3%. Weak numbers again reacting to that. Aside of that, you have Bharti Airtel, BPCL, Hero MotoCorp, Grasim, ONGC. So these are some of the counters that are witnessing selling pressure. But coming to you, Tata Consumer dragging the entire FMCG pack lower, Kunal. 5.5% downtick coming in here. How is this particular stock poised on charts aside of the likes of HUL and ITC?
See, Nandita, again, this counter has not done much for the entire year of 2024. Look at December 2023, first breakout, that was at 1030. From there, counter went up to as high as 1250. Again, it retested the same zone of 1000 somewhere on 5th of June. Again, went to the previous high and back to the same zone. So it's sideways consolidating. Yes, the numbers have been poor, but the price action is not showing negative trends so far. If for the week, if the counter manages to stay above 1000 mark and consolidates at the same level, I think this can be a good buying opportunity from positional point of view. The stop loss is below 1000. So if the counter manages to close below 1000, it's a clear exit. Otherwise, we can expect this sideways consolidation to continue for the rest of the year, and the trend might just continue positive again.
Okay, just want to point out we have a brokerage note also on Tata Consumer. Morgan Stanley has an overweight call. Target price, however, has been cut to 1273 rupees or thereabouts, and they have noted the volume decline that the company has seen in its tea segment, and also the fact that growth businesses organic growth has been weaker than expected, and market share seems to be the main focus for the company over margins as well, and there's been some softness in urban demand as well, although rural demand is kind of recovering gradually. But Tech Mahindra, this is another stock that's reacting to its numbers. Profit growth at 46.8%. Revenues have risen to 2.5% or thereabouts on a quarter-on-quarter basis. Margin has also been stable. In fact, 9.6% on a quarter-on-quarter basis, and dollar revenues have also been in line with estimates. But Tech Mahindra has seen a fairly good up move, right, along with other large cap IT names. In the last 6 months, we've seen this stock gaining as much as 45% or thereabouts. Do you see more up move, chances of perhaps testing levels of 1800 on the upside, because it has cleared its 52-week highs today, has hit a fresh 52-week high in today's session. Would you say that much of the buying could be behind, or could fizzle out after it hits 1800 or thereabouts?
See, Nandita, again, this counter showed us the first breakout on July 2023. That breakout was around 1175, and since then the counter is clearly making higher top, higher bottom. But if we look at the historical data, somewhere of 2021, December 2021, the highs were 1800 to 1835. There was a zone to watch out for. Now today, after this massive gap up open, look at the high, that's 1761, and the previous high, which I just mentioned as of 2021-22 data, is of 1800. So yeah, this is the level to turn cautious. If someone is already holding the position, trail the stop loss, and the trailing stop loss can be 1650. With that stop loss, one can hold on to the position, but fresh entry at this level is certainly not advisable in tech.
Okay, fresh entry not as advisable for Tech Mahindra. But from Tech Mahindra, let's shift focus to MCX. Numbers came out post market hours, on Friday. So the company has reported a net profit vis-a-vis a loss of 19.1 crore in the same quarter last year. Revenues have seen a strong growth of 70% or thereabouts on a YY basis. It has reported an EBITDA of 180 crore rupees vis-a-vis an EBITDA loss of 29 crore rupees almost in the same quarter last year. Of course, the stock has been outperforming, and how, in the last 1 year, I think, or on a YTD basis, in fact, it has doubled. And, today as well, it did hit a fresh 52-week high, but has come off opening highs. 6,500 is where it's at. Do you think the stock is in overbought territory now, or do you see, more upside from here on the charts? Would you still say that it continues to remain a breakout stock?
See, Nandita, it's not a breakout counter, certainly, yes, but it's a trending counter. June 2024 levels were 3,700, and now we are at 6,500, and still there is no sign of the sideways consolidation somewhere. The trend just continues, and in this trending counter, it's always advisable to stay invested, but buy on dip, because when the counter is making clear higher top, higher bottom formation, it's always advisable to buy near support. So for now on MCX chart, I can see the support near 6,200. By any chance, if the counter comes near 6,200, advisable to buy and hold the position with the stop loss of 5,800. And if this trend continues, let's just ride the rally, because there is no breakout. It's a trending counter, so advisable to stay invested, but buy only on support. Otherwise, risk reward ratio is extremely unfavorable, like TechM in MCX also.
Okay, another stock that I want to talk about is JM Financial. Of course, RBI has lifted the restrictions that it had imposed on the company like 7 months ago. It was prohibited from, providing finance against shares and debentures, including sanction and disbursal of loans for IPOs. And RBI had cited valuation, in fact, violation of regulatory guidelines, as well as serious concerns on governance issues were also flagged off by the central bank. But a good news, it's a shot in the arm, so to say, for the company, and we are seeing the reaction in stock prices as well. But if you look at the stock price in the last 6 months itself, it has doubled. Would you advise an entry at current levels, or would you say that, same way, wait for a dip and then get in? Because again, this counter also hit a fresh 52-week high today.
Absolutely, it's a trending counter on the midterm. But again, let's go back and check out 2007-8 data and 2017 data. Somewhere in December 2007, the counter made high of 160, and then we saw the massive correction coming in. The same high was just taken out for a week in 2017, where the counter went up to 190, and again we saw the decline till 55. It's the third time that the counter is reaching the same high again. If the counter manages to close above 170, 175 mark, yes, it can be a great opportunity to buy on the weekly chart. What I can see is the cup and handle formation breakout. So above 175 closing with the stop loss of 130, one can initiate a buy, and the targets can be as high as 250 to 275. But remember, it's a weekly chart. So yeah, it's going to be a positional trade for next probably at least 1 or 2 quarters. And one should trail the stop loss once the position turns favorable.
Okay, that's the view on GM Financial, but let's shift focus to all the queries that are trickling in this morning then. I want to start with a query coming in from Maheshwar Bhanu. He has queries on 2 to 3 counters. Basically, he wants to know whether, it's good to add some of these counters at current levels. The names of these counters are ICRA, VST Industries and Nestle. He wants to know if he can add for the medium to long term, for a 20% upside. Would you be able to advise him as to how he should go about it if he wants to make a 20% profit in the medium to long term?
So we'll just go step by step. The first is ICRA. Now, ICRA is a trending counter. See, breakout and target of 20%. For that, there has to be a pattern breakout. What I can see on the chart of ICRA is it's a trending counter. From the lows of May 2024, where the counter was at 5,000, it's now at 7,200. It's already trending. It has already given 40% rally. I don't know whether 20% is available upside, but if the counter manages to stay above 6,800, then the trend is likely to continue. So yeah, one can stay invested, but if the focus is only on making short-term gain, then I would stay away from ICRA because it's facing resistance as of now near 7,425. Above that, one can initiate a buy and stay invested. The other two counters name I just missed. Can you please repeat?
Nestle and VST Industries.
Nestle, again, what we have seen in the FMCG counters is that the trend is absolutely lackluster. But as of now, Nestle is available right near to the support. The breakout was seen somewhere in October 2023. The support was 2350. That level is still not broken. If Nestle stays at this level for a week or two, and if the uptrend continues from this level, yes, here I can say that, our viewer can expect 20 to 25% upside because the range, what I can see on the chart, is 2350 to 2650. That's almost 300 points rally. And the view might just go perfect if this range bound trading continues. But if by any chance the counter manages to close below 2350 on a weekly basis, it's an exit. So then in that case, we'll avoid this counter. Third counter, I'll just check out. Meanwhile, we can take up the next query.
Yeah, sure. I think the next query is coming in from Satya CK. He wants to know your thoughts on IDBI Bank, whether one should book profits or switch to Karur Vysya Bank, and his time horizon is 1 to 2 years.
See, again, what we have seen in the PSU banks have that the big rally was seen somewhere in Jan and Feb, and after that, it just went sideways. IDBI Bank, first specifically, remained sideways consolidating counter since Jan 2024. The support is seen at around 80 levels. Right now, it's trading at 83. And because our viewer has a long-term view, so he must be tracking the counter for at least 6 to 7 months. See the support, it's at 80, and the counter has tested that level almost 4 times by now. If the counter manages to stay above 80, I think one should stay invested. Give some time to it. If the momentum picks up, we can see the levels of around 100 to 125. I am personally bullish on this. The massive breakout was seen near to 55, and we also invested in this counter. We are still holding on to it. Our in-house stop loss is placed at 80 itself. By any chance, if the weekly close comes below 80, we'll take an exit. Otherwise, stay invested. So I'm just sharing the same view with our viewer. Stay invested for now, not much of a worry. And just answering the previous query, which was on VST Industries, nothing much on the chart, just sideways consolidating counter. If someone wants to play the breakout, then it's about 385 with the target of 440. I mean, our previous viewer can just take a view and probably trade. I would say stay with Nestle over VST.
Okay, that's the view. But since we were talking about banks, there is a query coming in on SBI as well. This one's coming in from ARC. He wants to know your thoughts on this counter. The stock hasn't done much. If you look at the last 1 month chart, even 3 month chart, the stock has been pretty sideways. SBI, what do you do with it now?
See, SBI, again, like the other PSU bank, this counter has not done much. But if I look at the trend by connecting the lows of 2020 and 2023, so that massive trend is still absolutely intact. I personally initiated a trade at 803 only because after the correction it was in sideways consolidation and it has given a breakout. Now the stop loss for that was 760. For now we have trailed our stop loss to 800 levels itself. So I'm sharing the same view with our viewers that stay invested with this counter. I think if the counter manages to give the next breakout above 825, we can expect the target of 855 to 860. I'm personally very bullish on SBI. The stop loss right now is at 800 levels. By any chance, if the counter comes near that support, think of initiating a buy with the same stop loss and with the target of 855 to 860. You can stay invested for next month also.
Okay, that's the view then. Very quickly, I want to squeeze in a couple of more queries before bringing on board our next guest. I think this query is coming in from Shyam Sundar. Even he has, queries on two stocks, Prestige Estates and Interglobe. Both these stocks have been stuck in a downtrend. If you look at, the 1 month chart or perhaps even the last 5 days charts, he wants to know if somebody already holds it, what should they do? Should they average out? He's bought at 5% higher levels.
Prestige Estate, I'm very bullish. Again, it's a sideways consolidating counter. June 2024 till now, the support was at 1650 and the resistance is at around 2000 levels. It's consolidating within that zone itself. So if the horizon is a bit long term, just stay invested with this counter with the stop loss of around 1625. By any chance, the counter comes near 1670 kind of levels, think of averaging out also. Not much of a worry as of now on this. I think this counter might just show us the breakout about 2000 with the target of 2200. One can stay invested. The other is the Interglobe, right? If I am not mistaken.
Right. That's correct.
Yeah. So again, on that, the support is 4550. Right now, the counter is trading at 4645. Momentum is missing, but sideways consolidating counter. So with the stop loss of 4550, one can stay invested with Interglobe also. But I would say, if our viewer has both the counters, focus more on Prestige and less on Interglobe for now.
Okay, that's the view. Then last couple of queries. Then I want to take up this query coming in from Shrivardhan Gupta on Cocoyu Camlin. I remember discussing this talk with you earlier as well. He holds somewhere around, he holds shares at 180 and wants to average out, and he wants to know what he should be doing for the medium term. This is one query. And secondly, I want to take up a query on IGL. Alex wants to know your thoughts on whether or not, it is worth a fresh entry at the current juncture. We've seen MGL, IGL, got a beat. Both these stocks saw some drubbing last week, of course, on the back of news flow. But does the sell-off, pose or give you an entry point at the current juncture? So these two stocks, Cocoyu Camlin as well as IGL.
Perfect. So now, as Nandita rightly you mentioned, Cocoyu Camlin we discussed somewhere in July, where it was giving the fresh breakout of the inverse head and shoulder, and the breakout level was 175 with the target of 225. We had suggested the recommendation. I mean, we had shared the recommendation with our viewer. Look at the high of September; it was at 230 levels. 225 was an exit level, and then the counter retesting the same breakout level which we saw in July. It's at 170 right now. If you're a long-term investor, it's absolutely fine to stay invested because the trend is positive. But if you want to play the momentum, this counter is a big no for now. If the counter manages to go below 160, it's going to be a trend reversal, probably even on the weekly chart. So stay cautious right now. With the stop loss of 160, you can stay invested. And by any chance, if the counter picks up the momentum, please revisit Money Control and check out whomsoever is available and figure out if the best opportunity is available for reinitiating the buy. Coming to IGL, the trend is positive, but the recent decline was very sharp. The volume is also higher. The support level to watch out is 430. If the counter goes below 430, take an exit. But otherwise, 430 can be a good level where we can expect the sideways consolidation, and then probably the uptrend might just continue. So as of now on IGL, it's a wait and watch, and we'll see if the counter manages to hold 435 levels.
All right, that's the view. Hope that answers your query. But with that, we've come to the end of the query segment. Kunal, before I let you go, what are your top recommendations for viewers?
So Nandita, I'm just going ahead with right now Reliance. I think Reliance is available right near to the support. It's a good bet for long-term trade also as well as mid-term trade. So with the stop loss of 2700, one can initiate a buy on Reliance and the targets can be 2850. Keep trailing the stop loss. Don't be in hurry to book the profits. I think this counter, if at all continues, will be the only counter to take Nifty higher to the previous levels. And the second is HUL Logistics. Again, this counter gave a fresh breakout and it's retested the breakout and now it's continuing again. So with the stop loss of 370, one can initiate a buy on HUL Logistics and the targets can be, positional targets can be 425 to 430. So these are the two counters to watch out for the entire next new month, that's of November 2024.
All right, those are the recommendations. With that, Kunal, would like to thank you for taking out time and joining in this morning. Look forward to interacting again sometime next week if
My
you're
pleasure.
available. Always a pleasure chatting with you.
Thank you so much.
Well, that was all about stock technicals and your queries, but let's now shift focus to some fundamentals, market fundamentals. Joining me today is Aditya Sood, who's the fund manager at InCred Asset Management. Aditya, great to have you on the show. First of all, we've seen quite a bit of volatility after hitting, the fresh high of over 26,000 or thereabouts. How should one really navigate this volatility? Does this remain a buy on dip market, or should one now take some profits off the table and, sit and wait on the sidelines for value to emerge? How are you looking at the market strategy right now?
It is that, essentially, if you look at any bull market, correction is a normal course of a bull market. And it just happened to be that, 14 months we didn't see too much of volatility in the market. And that was a function of essentially global liquidity, in the sense that, Dow continues to make all-time highs. But as we go forward, two critical factors. One, obviously, there is the geopolitical angle in terms of, the extending war that we are witnessing, which obviously has an impact on, crude oil. And what we have seen of late is that, crude has started to moderate. The second aspect is going to be earnings growth, and that is more from a market standpoint. Now, if you step back and think about it, we have had 25% CAGR in terms of earnings growth for last 4 years post-COVID. Obviously, COVID was an aberration in terms of, earnings decline. But going forward, what we expect is that there is going to be earnings growth to the extent of, 10, 12%. Markets clearly are not cheap. But what we have also seen at this juncture is that we have already seen 30-40% correction in stocks which were, for example, defense is a clear-cut example here. A lot of defense companies did extremely well, and we have seen 40% correction. On a bottom-up basis, what we are witnessing today is that there are lot many opportunities wherein we have again seen a correction, and this will continue to be a buy on dip market in our view, and we would continue to focus on bottom-up stock picking. Although the extent to which markets can rally from here on is going to be purely a function of earnings growth, which is going to be 10-12% sort of a number at best. And we are seeing opportunities in sectors which have not done well in the past, so that continues to be a huge area of focus for us.
Right, you mentioned 10 to 12% earnings growth. So where do you see scope for PE expansion now? Would it be banks, IT? Where do you see PE expansion coming from?
Sure. So in terms of heavyweights, obviously, Reliance is one of the heavyweights. We believe that, essentially, it is more PE expansion is going to be more of, combination of how capital allocation plays out there, which is essentially listing of Geo at some point in time. If you look at banking as a sector, I think so. Banking is much more reasonably priced today, especially the large cap banks. Although what we are seeing in banking is that the trends are now mixed, in the sense that we have got stress, which is getting highlighted by a lot of microfinancial institutions. NBFCs continue to trend well. So our belief is that large cap banks are reasonably attractive from a P price to book expansion standpoint. IT is a very, very interesting sector. We do believe that post the election cycle in the US, there is going to be a significant element of IT budgets which are postponed. There is going to be a significant scope for total contract value to increase over a period of time. Obviously, it is also converging with certain IT mid-cap companies which will benefit out of the AI sort of a focus. So that is a very, very interesting area, potentially from a mean reversion standpoint. We like hospitals as a sector. We are witnessing a lot of consolidation, which is driven by private equity players trying to consolidate their hospital exposure. So we like hospitals as a sector. Although this is a sector which has done well, so there are few value opportunities that we are focusing on. On the pharma side, we like companies which are purely focused on API as a play, and agrochemical is a sector which is completely beaten down. Last 3 years, what we have essentially seen is agrochemical companies have been in a down cycle. So what we expect is that there is significant room for PE expansion in agrochemicals as well. And on the consumption side, companies which are focused on rural consumption, particularly. So our view is that that post-COVID incomes have not normalized. So we are focusing on plays which benefit out of upsurge in rural consumption, and it is going to be a combination of low unit items doing well over a period of time. So these are the focus areas for us.
I want to ask you a question. Since you mentioned the pharma, hospitals, etc. Newland Labs was one of your, stocks that was in your portfolios, right? That has given multi-bagger returns. So, what would your advice be when it comes to stock picking? At a time when everything is at all-time highs, everything is looking expensive. How do you really identify stocks that have the potential to turn into multi-baggers here on?
Sure. So one of the rules that we are, sort of very focused on is that, if you are buying anything incrementally today, whether it is going to deliver a 20% plus IRR sort of a return. The second point is that, purely in terms of multi-baggers, typically the best time to scout for multi-baggers are when business and market both are not doing well. We are in a phase wherein business and markets are doing well at this point in time. But it is more about, aligning yourself to the long-term opportunity that some of these players would have. For example, in the case of Newland, if you look at the stock price movement, obviously the stock has done well from a 3-6 month standpoint. But if you look at the COVID low for the stock was, closer to 250 rupees. It has been a 50x stock from COVID low. What is so unique about Newland as a company possibly is the quality assurance and quality control track record that it has. The biggest risk in pharma investing is obviously how the regulator could come down heavy on you. Newland is incidentally one such company. Over last 40 years, it has never failed a US FDA inspection. On top of that, what we are also witnessing is that there are certain segments of the market wherein there is huge tailwind, in the sense that you have a biosecurity tailwind for Newland Lab. So what we believe is that structurally the opportunity that you are witnessing today for a lot of these companies over the 3, 5, 10-year period would be so massive that if you sit back and think about it, it'll result into superior compounding. Another very important aspect of identifying companies would be whether these companies are at an inflection point and whether the growth is going to be self-funded. So what we have seen in the case of Newland is that it used to have sort of minuscule debt in the past. Now it is moving to a free cash flow sort of a zone wherein it is reinvesting for growth. So we do believe that growth is going to accelerate. So some companies, there is exponential opportunity to tap into a very large target addressable market. So that is what we are very focused on.
Right. Last question really, Mr. Sood. We've seen FIIs being heavy sellers in the Indian market this year. On the other hand, China is stepping up measures to boost its economy. Do you think the next big threat, aside of what's happening geopolitically, could be China? Because till now they haven't really been able to, dole out very significant stimulus measures, right? I mean, they have not really put a dollar figure to the stimulus that they have announced. Although today they did cut their lending rates by 25 basis points or thereabouts. Will China be a big threat? Do you see that potential? And secondly, in light of that, any view on metals? Because metals seem to react to anything that China does. So these two aspects of this question.
So on China, so one has to be very mindful that if you look at last year or so, what was happening to emerging market allocation was that the asset allocators started to have allocation towards Asia, which was Asia, ex Japan and China both. Lot of sort of, I think so it was more driven by positioning to start with, because a lot of long only managers were massively underweight on China. And if you have got such a large stimulus which comes through, obviously the impulse is to go and possibly have a neutral weight on China. So that was one element. I think so we are past that element now of China rally, and what we have seen is that it is in the stage of fizzling out. So that is one. Second thing that all of us have to sort of focus on is China had a debt to GDP of close to 300 odd percent. So if you have deleveraging cycle, and that deleveraging cycle is linked to real estate deleveraging as well, possibly that is going to be a long down process. It is not going to be driven by impulse of stimulus coming through, and everything is sort of set right. So our view is that that it is going to take at least 16 to 18 months from here on for Chinese economy to deliver. So we are in the middle of that. So I would treat this China rally as a tactical sort of a play. The only problem that we have seen in the past is that everybody wants to sort of unwind positions in let's say a week or so, and that is what we have seen in the case of Japan, the yen carry trade, and that is what we are witnessing in the case of China. So I would say that this creates an excellent opportunity as far as India is concerned, because in a structurally buy on dip market, this is offered an opportunity to essentially the domestic investors to position themselves well. And as you are aware that there is a lot of cash which is sitting on the sidelines, which is being waiting to be deployed in the domestic market. So that is one element. On the metal side, our view is that again it is very similar to a tactical China trade. What we are witnessing today essentially is the prices have seen somewhat of some sort of a rebound, and this is what is getting reflected in the price action that we are witnessing on the metal side. I think so. What is more interesting is how raw material behaves at this juncture to clearly read into a rally which could be sustainable on for metal stocks.
Right, point taken, Mr. Sood. Would like to thank you on that note. I'm afraid we are running out of time. Appreciate your joining in this morning, and I look forward to having another conversation with you pretty soon.
Thanks for having me.
Thank you. On that note, I want to quickly take a look at the market. The entire complexion of the market has changed. In fact, stocks have taken a U-turn, given up all of the opening gains. In fact, we are staring at a triple-digit loss coming in on the Nifty from a triple-digit gain. So it's a 200-point, downtick coming in from opening highs. The Nifty Bank Index has also given up all of its gains. What's really dragging the market is the FMCG pack. That's down over 1% or thereabouts, dragged down by Tata Consumer that has shed 8% in reaction to its earnings. Autos also as a pack have given up all of their gains, almost 1% or over 1% kind of cut coming in on the auto pack. The India VIX has jumped over 7%, so it's cleared that 14 level as well. And it's, weakness all across. Even the broader end of the markets have given up all of their gains. In fact, the Nifty Midcap Index is down 0.3% as we speak. So all of the gains have been erased. We had a good start, but counters like Tata Consumer, Kotak Bank, BPCL, these are some of the counters that are witnessing sharp cuts, and it is dragging the market down. But the top contributors, I want to just see negative contributors on the Nifty: Tata Consumer, Kotak Mahindra Bank, Infosys, Bharti Airtel, and M&M. These are the top 5 contributors to Nifty's fall this morning. But on that note, just a quick update. Waaree Energies IPO will be opening up for, or has opened up for subscription today. 4,321 crore rupee IPO. There's a fresh issue of 3,600 crore rupees. The price band is set at 1427 to 1503 rupees per share. And of course, you can bid for it in lot sizes of 9. But we will be getting you the management later in the day at 11 a.m. For a chat with over their business expansion plans and what they plan to do with the money that they are raising. Don't forget to join in for that. But of course, for now, we are completely timed out. Not a pretty picture. We've given up all of the gains. The Nifty barely managing to hold that 24,700 mark. Remember, we had come very close to that 25,000 mark, but that seems like a distant possibility, at least for now. But from me and the entire team, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates. And of course, come back and join us for that chat with the management of Waaree Energies at 11 a.m. Thank you.